Good afternoon, ladies and gentlemen. Future here of FutureMeDead.com. This is part 3 of an ongoing series. We are covering the spot price of natural gas. In the previous video, that is part 2, I was asked whether this was going to be a double bottom, and the conclusion was that there really is no evidence of a long-lasting bottom just because you are reaching a previous low point. In fact, we have gone lower. We did highlight the potential for a temporary bottom due to the end of a third wave. Now, it wasn't an official call, but you can see here the video is dated the 2nd of March, and the actual low came in 2 days later. We actually had done a Fibonacci study. A common wave relationship between waves, specifically between waves 1 and 3, is that wave 3 is oftentimes 1.618 times the length of wave 1, and I will show you that study. So we will take our Fibonacci projection tool, or in the case of TradingView, it is a trend-based fib extension tool, and we will draw out the length of wave 1 and project that lower from the beginning point of wave 2, the beginning point of wave 3, which is the ending point of wave 2. Okay, so let's put in the 1618, and you can see price has reversed exactly from this level. Okay, there is no previous support and resistance here, at least not for many months, probably years on end. So this is specifically due to this wave relationship. So that's a good thing. We do have confirmation that the end of wave 3 was had on 2 days later on the 4th of March, and I will show you that. We're going to zoom in and look at the wave count. Let's go over to a 15-minute chart. Okay, and here's the low. Now, what has happened here, this pattern is that of an impulse wave. Okay, this is a wave 1, a deep correction in wave 2. Second waves are often deep. A sharp thrust in wave 3, and a triangle in wave 4, followed by a final fifth wave that led us to a double top. Okay, so I will label that. You can see here wave 4 took the shape of a very nice triangle. This was wave A, B, C, D, and E in contracting fashion, before a final thrust in wave 5. Now, this completes an impulse wave. What's really good about this pattern is that it cannot be an entire correction. The reason I'm calling this a correction is because I believe this is a corrective rally that, whenever is complete, will eventually give way to lower lows. But if you're a day trader, this does provide you a bullish bias moving forward, potentially for the next few days. So now that we have a completed 5-wave structure to the upside, we should expect a 3-wave decline. I like them to be to reach the Fibonacci zone, which is the 382 up to the 618. Okay, you can see we've already clipped the 38.2% retracement level. It is possible that this is all of the correction, but I'm going to go ahead and remove it because we've already reached it, and I'm also, because natural gas is in a long-term downtrend, I'm going to demand another leg down in order to minimize my risk. Now, where am I wrong? I'm wrong at the lows at the beginning point of this wave structure. So let's highlight that. Okay, so if I'm taking a bullish bias, if I'm placing a bullish bet, I want my stop loss to be at 1611, okay, or slightly below. I would prefer if this correction would unfold a little bit deeper into the 618, which is a common stopping point. I'm going to go ahead and set an alert right between the 50% and the 618. Okay, so I'll get a text message and an email and all that jazz. Now, once, and let's actually label this wave A. Okay, proposed wave B, and should go higher in wave C. How much higher? Well, in the previous video, we identified potential resistance in the area of 185. Okay, at that point, what we can do is take wave equality. We'll take the measurement of wave A and project it higher from wave B. If this is all of wave B, then we can already do this study. Once again, trend-based fib extension tool. And let's put in the 100% mark. That comes in at 180, which is in the vicinity of our target. I believe this was drawn incorrectly. 1 second. There we go. Okay, let's zoom out a little bit. Let's go over to the 2-hour time frame and just put in those studies once again. Fourth waves, which is what this would be. This would be an ABC to complete wave 4. A common fib retracement for fourth waves are the 38.2% retracement level of wave 3. Let's put that in there. Let's clean this up. Okay, you can see here that comes in at 182.5. We'll also take, once again, the trend-based fib extension tool. We'll do an external retracement of wave 2. So we'll draw out the length of wave 2. Projected from the low of wave 3. And here too, we're also looking for 100%. Let's drop that down. Okay, so there's a confluence in addition to this downsloping middle line of the parallel channel that that price is working its way lower in. So we have, once again, as described in the previous video, stiff resistance in the area of now that it's been a little bit refined because we do have an actual low, the resistance zone is between 180 and 185 with the previous fourth wave of 1 lesser degree coming in at 184.8. Okay, so if you're a short-term trader, if you're a day trader, look for a small decline. You can go ahead and buy either with an ETF or futures directly. We know where we're wrong. Okay, if this is not an impulse wave, we don't want to stay long in this trade. This is a counter trend trade. Okay, so our stops would be below 161. Okay, if you don't want to go counter trend, then what you do is you wait for price to reach the resistance area in the areas in the zone between 180 and 185 and initiate a short. Okay, so that you can catch the long-term downtrend, which is far from complete. So that's it for now, guys. Once again, if you have any questions, leave a comment below. Check me out at futuremedead.com. And if you have any questions, I'm always on Twitter at futuremedead. Best of luck.